Today, this video is going to be very important. Do not skip any part of this video. There are a lot of learning here. You first understand what are the rules of price action for the parallel channel. When there is a break of trend line, usually what we see, when there is a bull channel and there is a break of bull trend line, usually we see a formation of new high. This is the high in the channel, the highest point in the channel. Usually we see an attempt to form the new high. Most of the time you will see a higher high. Sometimes we may see equal high and sometimes we may see lower high. Most of the time what we see is a new high, and after new high, the second rule of the price action say usually we see correction or reversal. And if the trend is too strong, after correction we may see the continuation of the previous trend. These are the three rules of trend line break. Okay, when there is a break of trend line, we see a formation of new high in the case of bull channel, and when there is a bear channel, when there is a break of trend line, what we see, a formation of new low. New low is usually lower low, like you can see here. Most of the time it will be lower low. Sometimes it can be equal to the lowest point in the channel. There will be double bottom formation and the price may reverse. Like here, you could have a double top formation and the price may reverse or correct here, and there may be just an attempt to form a lower low, but most of the time usually you see 80 to 90% time a new low. Okay, there may be support somewhere and the price may correct or reverse from there. The second rule says after the formation of new extreme or either the new high or the new low, there may be correction or reversal, but if the trend is too strong, the trend may continue after correction. Okay, that was the rule for the price action, rules of price action for the trend line or the trend channel. But what happens usually when there is a break of trend line, in the case of bull trend, we will see two-leg bearish correction. That is the point I want to highlight today. That is the learning for today. We saw it in the live market. I have the recording in this video. You can watch at the end of this video. Let's understand the theory first. When there is a break of trend line, usually what we see, ABCD move, and usually AB is equal to CD. There will be two bearish leg correction and then the market will form a new high. Even that move will have two leg. Usually market moves on two leg. That's why we focus too much on the second entry. The first entry with the first attempt, usually it fails, and the second attempt is when the market actually moves. That's why we use the second entry. So what happens in the bear trend? There will be break of trend line, and here also most of the time we will see ABCD correction, two leg bullish correction, and these two legs are equal most of the time. Sometimes that leg may have two leg within itself. There may be two legs in the first leg and two legs in the second leg. You will see on the chart. I will show you. Similarly here, there may be two legs in the first leg and again two legs in the second leg. Okay, and most important point is that most of the time these will be equal measured move. AB is equal to CD. But sometimes when the market is bullish, even after breaking the bear trend line, market is bullish. There is no intention of forming a new low. Okay, suddenly there may be some reason, there may be news, or the bulls are more powerful and they overwhelm the bears. In that case, this will get extended. Okay, AB will not be equal to CD and CD will be extended. It may be double of AB, it may be 2 times or 3 times, depends upon how much is the strength of the bulls and where is the support and where is the resistance. That is what usually happens. That's why I have highlighted. Today it happened in the market. I have the recording. I will show you in this video. And sometimes this will not even be equal measured. There may be CD will be less than AB. In that case, sure shot you will get the new low. So this will give you a clear view whether you are going to get the new low soon or not. Okay, if the bulls are more powerful, the second leg will be extended. If the bears are more powerful, like here in this case, if the bears were more powerful, they could have brought the price to this support level from where the trend is started, and that would be over. There will be no new high. Okay, and if this CD is less than AV, in that case, most of the time you are going to see the new high. And if it is a measured move, that's better. Usually that gives a clear view that you are going to have a new high. And that move will also have two legs, and that each leg may have two legs. Okay, let's go to the chart and see on the chart what happened today. There are some examples, like here you can see there was a bull channel, they will break, and then one bearish leg correction and the second bearish leg correction. And if you measure this AB is equal to CD, again here there was two leg bullish correction, AB is equal to CD. Then what happened? This was itself a one leg, and there was formation of another leg, and that leg too also had more than two legs. Actually, you can see first leg, second leg, then they will further move. So it extended beyond this equal measured move. If you measure from bottom to this swing high, this was what should have been the equal measured move, but it extended beyond. It broke the range. There was a range formation, and that move was almost equal to this range. That what the rule of the range says. So it did not stop there. It extended. That was showing the strength of the bulls. Okay. In that case, there will be no new low. As soon as you see this major move gets extended, you can be sure that there will be no new low form. When there is a break of trend line, you can start thinking about trade in both the direction. It is not necessarily that you think only about the new low and you don't take bullish trades. After the break of trend line, you can start thinking about the long as well as the short. That is what Albrook said in his book. You can read his book for reference. Here also what we saw, one bullish leg, another bullish leg. If you measure these moves, these were of equal length. This keeps happening all over the chart. This was the break of the channel, one bullish move, another bullish move. Then the market corrected. There was formation of attempt to form a new high, and the market corrected from there. There was break of the channel. There was, here you can see there was one micro bear channel. Then there was formation of new low. So this bearish move was over after the formation of new low. It itself had two legs. Then also it formed one bearish leg. And after these two bearish legs were over, what we saw was the formation of new high. As per the rules of the price action, when there is a break of trend line, usually we see a formation of new stream. That's what happened here. The first leg had two legs and the second leg had only one leg. Okay, it formed a double bottom here. But as soon as you got the second entry long, and you could have entered here, but this was below 21 EMA. If you follow the rule that I will go long only above 21 EMA, and if you are making sure that you are going to take only A++ setup, then you could have entered here when there was formation of higher low. After this, you got the higher low here. It was above the support level. It was above the bottom of this bar. If you entered here, your top loss will always be below the bottom of this bar, and your entry will be just when this bar high was broken at second entry long. Here, after the new low form, your bearish leg move was over, and you expected the new high, so you could have entered there. But it was better to see whether the bearish leg is really over. There was another attempt to break this low of this, break this support level, but it failed. There was another indication. Here the bears failed, they failed again, and two times when they have failed, there was an indication that you can enter the trade. There was first bullish leg up, second bullish leg up. You can see here, first bearish leg down, second bearish leg down. Market moves on twos. First bullish leg up, second bullish leg up. Okay, first bearish leg, second bearish leg. Even this leg had two legs, first bearish leg, second bearish leg. First bullish leg, second bullish leg. You can keep seeing two legs on the chart. If you start observing these things, price action will look clear and easy for you. It will become easy for you to trade. You don't need any indicator. You just need some lines, some parallel channels, some zone where you can enter the trade, like these trend lines, 21 EMA, support and resistance. That's it. You need to wait for certain bar pattern to form. Second entry long when you are bullish, or the failed second entry short. And the market is bullish, we look for second entry long or the failed second entry short. And the market is bearish, we look for second entry short or the failed second entry long. Okay. I have covered most of these points in many videos. You can watch other videos also to learn how we trade using hyperbolic setup at key entry point. Here were the failed second entry long and second entry short. I will cover it in the next video where I will make about post-market analysis on the 1 minute chart. This was the learning which I wanted to share with you. They attach video with this video at the end. Please watch that video too. That is recording of the live session from today. Thank you. And it may form a second short here. We many times you will see measured move. The length of this will be equal to the second leg after the break of trend line. Like here, if you measure the move, let me show you here. If you measure this move, this was of 17 points, around 16, 17 points. And if you measure this move, this was also full length. Okay. This is recording from the live session today. Same thing will most likely happen here. See one major move of 29, 30 points. So you can expect another major move. This is what we usually see. If it stands, it means the market is more bullish. Okay, and if it remains below the major move, it means the market is bearish. Most of the time, you will see the equal major move after the break of trend line. Not always, many times. In such beautiful pattern, you may get that what I'm trying to say to you. Break of trend line till here. This is the break of trend line. And then what we saw? Two leg moves. Here also you saw two leg moves. So we had completed the measured move here. Almost completed the measured move here. As you will spend more and more time, this provided support, will it actually resistance? Let's see. This was also the second entry short here. This was not just a measured move. There was second entry short also. That's not equally. So now we have to measure from here to here. See how the measure move most of the time take place. Usually we see equal measure move. This was the first leg, this was the second leg, and this is part of one leg, and this is part of another one leg move. There are two parts here too. Many times you will just see two parts. Here There were 4 parts: first part, second part, third part, and now we will see the fourth part. Here there was only 2 parts. Here after the break, there was one leg down, second leg down. Okay. Many times these legs will have 2 legs within themselves, and they usually are of equal length. This is all the recording of today in the live session.
p.m. anything can happen at 3 p.m.
We were close to 3 p.m. and see, it hit the major move and it extended. It went beyond that level. That shows the market was bullish. There were no new low form. Market was so bullish, it continued going up, and even this measured move was not enough to be across the measured move. That's the learning from today session. Thank you.